Hi guys, welcome back to another episode of Valetalks. Move the talks the power your next move. My name is Innocent Ifere Ryan, and with me today I have my beautiful guest on Valetalks, Alfredo Marantes and Manesh Patel. But as always, before we get right into it, we're just going to go through what our episode is going to be about today. And just right before that, I want to tell you guys that you should always remember to tune in to Valetax every episode, even episode 4 that would be out by next week. So don't just wait on every on previous episode. You can always tune in to new episodes as well, so you catch up as soon as possible. I want to believe that we can all see my screen. So welcome to Valetalks. And today we are going to be talking about risk or edge, what really makes a trader profitable. And that is our topic for discussion today. And I'll be your host, Innocent Ifere Ryan, as I had previously introduced myself. Today, our guest is Manesh Patel. If you've been following from previous episodes, then I'm sure you know who Manesh is, and also Alfredo. Manesh is a global market strategist and an educator and engineer, CMT and CFT trader with over 25 years of experience in trading. Thank you for being present today, Manesh. And also Alfredo. Alfredo is our senior market analyst for the LATAM region, which is the Latin American region. At Valetax, he has a master's degree in stock market financial markets trading with over 6 years of experience in the industry. Thank you guys for being present today, Alfredo and Manesh.
Thank you, Ryan, for inviting us.
Thank you. And moving forward, I myself am your host, Ryan Ifere, and I'm a senior market analyst at Valetax, and I have over 5 years experience in trading and majorly love sentiment and psychology when it comes to trading. And hence today why we have this beautiful topic called risk or edge. Okay, so moving forward, here's an overview of what we're going to be discussing today on Valetalks. First, we're going to start up with the misconception. And in order for us to get the misconception, it means that we first have to have a definition. Secondly, we're going to try to understand the difference between or the relationship between risk and edge. And thirdly, we're going to move into understanding what does a trader actually need. And at number 4, we're going to close it out with an important question, which is more important to a trader, risk or edge? And then we take our Q&A questions from the audience or within ourselves to just have a discussion. But before we go into that, I'm just going to give a minute each to my guests to just, say something briefly about themselves, and we can move forward from there. So thank you, Alfredo. Just quickly do a brief introduction about yourself.
Surely. Thank you, Ryan. It is a pleasure to be here with you. I believe we have a very interesting topic in hands. I am, as Ryan mentioned, I have been trading for the last 6 years. I have a stock markets degree, and I believe it is really important to discuss these type of topics because risk and edge are both equally important and extremely important when it comes to trading. And I believe it will be very interesting to talk about this. Thank you.
Thank you very much, Alfredo.
Hi, I'm Manesh Patel. I started trading in 1996. I went from a retail trader to institutional trader. And this subject is very, very key because it was very instrumental for me to turn that corner from retail to institutional, is to understand risk versus edge. So this topic is very dear to me and part of my foundation today.
All right, then. Thank you so much, Manesh. Everyone, that is Manesh. He is the most experienced amongst us and has, more experience in a whole lot of things when it comes to the financial markets. So I'm going to be expecting to hear a whole lot more from him today through his basket and wealth of knowledge. Okay, so first thing first we're going to be looking into today is risk or edge. What does a trader really need to succeed? Yeah. And this is where we start out with, a lot of traders saying and they need an edge. But what really they're looking for is just something to make them feel safe. And some traders say they need to take more risk, but what really they're trying to say is they need to make more money. But here's the reality to it. Most traders don't lack an edge. They lack the ability to protect the edge and the ability to protect their capital. So we're going to be looking at the misconception. Okay, so this is where our conversation is going to be starting from today, Manesh and Alfredo. But before we go further to understanding the misconception, the part I'm going to be playing today is basically just giving a definition of what risk and edge is in pertaining to the topic for today. Okay, so according to the definitions that I put to make it very simple is risk is the exposure to potential loss in every trade, and it is the amount you're willing to put on the line knowing that the market may move against you. And it is also the amount you're willing to put into a trade in order to get more reward.
Well, meanwhile, we can, I believe we can go ahead and discuss a bit of these initial points that we were talking about, Manesh, about risk and edge. For me, I believe that they are both really important in the sense that you can have an extremely good risk management, but if you do not have a statistical edge over the market, you're not going to make money. And in the other side, you have the other side of the coin, right? That you might have a great statistical edge that can give you a really nice strategy with nice win ratio, with nice effectiveness. But if there's no risk management, it is very probable that you're going to end up blowing up the account, right? So like the sweet spot is right in the middle. First, finding an edge. Once you have an edge, just make sure to have a proper risk management in place. But yeah, at the end, I believe that they are both very important, and it is putting them on a weight, balance. They have to be. They are both. I believe it is crucial in trading. It is 50% on each, pretty much. But putting psychology aside as of now, only speaking edge and risk, I believe they are equally important because you do need an edge, but you also need an understanding on risk management. But I believe that everyone has experience, and you can give your experience in that manage of having a good edge on the market, actually having a strategy that gives you an edge, but because of psychology and because of not following a proper risk management, you end up blowing everything up, right?
Yep.
Yeah.
Yeah. So I mean, if when we talk about risk versus edge, it means something different for everyone, right? And that's the thing that has to be clarified, and everyone needs to understand. Also, depending on where you're at in part of the world, that also makes a big difference because leverage is a huge part of trading today. Back when I started trading, there was not much leverage. Today, you have 100x, 200x leverage on all the accounts. Yeah. And this is where this topic becomes the most important because the brokerages are giving you a tool that you could pretty much do anything with. And that's the thing you have to control. One of the things that was instrumental for me to go from retail trader to institutional was understanding this topic, right? Because in order for you to become an institutional trader and to manage money, they're going to look at your risk for every trade, and they're going to see how much risk you're taking per trade. And if you're taking too much risk per trade, they're going to automatically decline you, and they'll never take you in to their firm and to manage money. The key is that you got to risk a little to make a lot more. And that's the fundamental foundation that a lot of people need to understand. Today, a lot of people come to this industry on currencies, especially in crypto right now, with the leverage, and they're sitting there trying to become millionaires overnight. It doesn't happen that way. And if you do make a lot of money off the volatility, it's a fluke and you're setting up bad habits to a point you're not going to last. Remember, our goal is to get into this industry, get the rewards from it consistently forever, right? We're not here to win a lottery ticket, as we call it in the US. We're here to make a profession out of this, to get the rewards from this business and to stick around and to never blow out your accounts. And I could tell you this now, and this is personally speaking from my personal experience. Every time I blow out my account, it was due to risk management. There was no risk management at all. And in fact, when I started trading in 1996, there's a lot of institutions that did not have a risk management department. I mean, big firms too. And due to all the volatility that's come into this market, now institutions have a separate department just for risk management. Before they were allowing the traders to do the risk management. Now they don't even allow that at all. And then now what they're doing is they've taken it one step further. Is there's a back end office for those traders to a point where if they're taking too much risk on a trade or in their entire account, they're automatically cut off. So institutions are spending billions of dollars in risk management, whereas we, the retail trader, do not see that. We don't understand that. And that's the most critical thing. You should not blow out your account. If you have risk management, you won't blow out your account at all. And that's the key thing to understand going forward. And unfortunately, especially in crypto now, it's gone crazy with these altcoins. And I see this every day on social media. And that's our biggest enemy is social media. You see all these people saying, hey, I just had a 120% increase in my account. And if you look at the snapshots, you'll see on the crypto trades, it's 100x, 20x, 30x, and everything. And they're literally just throwing money at the market and praying and for luck. And that's literally what's happening. And understand one thing on the institutional side, and we did this. We had psychologists on staff. So we studied human behavior. We know if we let you win, you're going to sit there, keep on adding more money, and you're going to use more leverage, more and more and more. And then eventually we're going to take the floor out from you and you're going to lose everything you made in a short time and you're going to get a margin call. So you have to be very careful if you don't do that risk management.
And I believe that the moment that us as traders take bigger risks is when you're confident, when you're having this sensation of invincibility, like nothing can take you down. And that usually happens after a winning streak or after, as you mentioned, I believe that it is pretty much the case for everyone that consistent profits that are pretty much systematically being given to you so that you lose every sense of risk, every sense of fear, completely lack any type of risk management, go all in, and that's when everything goes down.
Yeah. And people have this bad conception. Oh, sorry, Ryan, go ahead. You back?
Yeah. So, sorry guys, my network went off a bit there when we're talking about the misconception, but I believe Alfredo kind of held it up for me when it came to the part of misconception. I think another very big misconception, that the industry is having, is a lot of I would want to use the word successful, because people define success nowadays based off monetary prominence, is how they define successful, and they really don't even care to know what the number of trades and win ratios of the trader is, for as long as he has money, and that's what makes him successful. So we have all of these traders come on the internet talking about things like risk, no risk, no Ferrari. Very popular, thing on the internet, especially amongst the Gen Zs, the 21st, century babies. We hear things like no risk, no Ferrari. And I feel like it's kind of a brain rot statement to give to people, because now people have the notion that if they don't go over leveraging, they're probably never going to make it in trading. So you have people trying to rush the process, trying to become profitable in a year or two, and everybody wants to buy a Lamborghini. People want to drive an SVG. People want to drive a Ferrari. People want to do all of these things. Yes, we understand that one of the things that brings people into trading is the life it can give to you, the freedom. but then it didn't just happen immediately for other people. Yeah. So now that's one major misconception. And then this leads me into the next question I have for you and Alfredo. Would you say that risking is a problem, or would you say people are taking huge amounts of risk without having an edge? Because if an edge is a systemic and a strategic system that allows you have favor in the market and pushes your probabilities an edge higher, okay, to be able to win, basically off the fact that you have a consistent system, yeah, that has proven itself over time. Would you say having to risk a bit higher when your edge is good enough is one of the things that helps you make more profit? Or would you say the problem is a lot of people are risking and over risking without having an edge?
If I may start with that, Manesh,
Yep.
I believe that the thing is you can have, or for example, if you do not have a statistical edge, but you have risk management, as Manesh said, you won't blow up your account. Like even if you do not have an edge,
Okay.
you won't blow up your account. Then that's a key difference, because in one side you have like no edge, but risk management. In that sense, you are much more protected if you do it the other way around. If you have an edge but no risk management, you can most definitely blow up your account, because it is natural in trading to have consecutive losses. It is something that happens. It is part of the statistical window that you have as a trader, and it can happen. You can have a losing month. You can have a losing streak of 1 week, of 2 weeks, of 1 month. We have seen there's funds and hedge funds that have losing years. And the thing is that you have to apply a risk management. So in that sense, you are protected even in the worst of the scenarios. Of course, it is very important to have an edge in the market. It is extremely important, but you must have a risk management in place that can protect you even in the worst losing streak on your trading. And what is the worst losing streak you might have? You can know it based on backtesting and based on the statistical history. So in that sense, I believe that, of course, if you have an edge and you risk more, you're going to be able to win more, logically speaking. But it is not an intelligent thing to do based on the fact that any system can fail. Market conditions can shift at any time. What is profitable in the past might not be profitable in the present and in the future. You know, like a backtesting of 2 years of a certain strategy after 6 months might not longer be profitable. In that sense, I believe that at the end, it is finding a balance on having a statistical edge, but having a risk management in place. If you do not have a risk management in place, there's nothing that can be done.
Very true. I totally agree with you, Alfredo.
Alfredo,
go ahead, Manesh.
I'll elaborate more on that. When you have an edge, you're doing back testing. Okay. And when you're doing back testing, you see what has happened in the past and you could see what the probabilities are, but there's no guarantee that it's going to happen in the future at all. And then in your back testing, which is giving you the edge, you know that you're not going to be 100% at all. In your edge back testing, you also know that you have to have a stop and everything. So if you have all the statistics for the edge, the back testing you got, then you should know that you do need risk management. And this is the problem most people have. They feel like they have the edge, but they think it's a guarantee that you're going to have these same results in the future. And there's no guarantee in this market. Remember one thing, you can't control this market and things keep on changing. When I started trading in 1996, it's very different today. When I started trading, there was not many online brokers. Now there are. You've got more retail traders trading in this market than institutional. And then you have the internet, which brings in a lot of crap, as I say, because you have all these people saying, hey, I'm 99% correct, or I'm doing this. I made $1 million. You got the Ferrari in the picture, right? People sitting there with a plane in the background and all this stuff. But at the end of the day, a real trader will never sit there and do that. A real trader is not going to sit there and show off materialistic objects or anything. They're doing it for the right reasons because they want to be consistently profitable. And they know that if they bring in emotions, it's never going to work. So, you have to have that risk management there. Without that, you're never going to make it in this industry. You may win on a couple of trades and stuff like that, or you can go get a Rolex watch and all that, but sooner or later, you're going to lose it all and give it back. And remember, consistency is the key. Okay. And understand one thing, for 5 years, I had to have a track record for 5 years. And when I had that track record for 5 years, the institution went through all the trades, everything. They literally looked at each one of my trades and looked at what was the risk I was taking and what was the reward I got. And that was the key thing. They did not care about my win-loss ratio or anything. And then even when we were creating black boxes that did 40,000 trades per second, statistically in back testing, it was great. But when you go live, there's a lot of things you can't account for. Slippage, spreads, volatility, black swan events, all kinds of things. And we live in a world now where the internet dictates, where once something happens across the world, I'm going to hear about it in 1 second, which could influence trading. Nothing's going to be the same at all. So yes, your results were great in the past, but there's no guarantee to work in the future. And risk management has to be the key in order for you to survive and to be consistently profitable.
Thank you very much. Thank you very much for that explanation, Manesh. I think you said something key there, and I would just share something quickly, before I move on to the next thing on our itinerary for social media a few days back, and someone said something that there's no profitable trader that doesn't show a lifestyle, and quote unquote he stated that everybody trading got into trading for the lifestyle. So at some point in time, you need to be able to see that lifestyle within a trader to know that he's profitable. And I went to his comment section and I said the idea or the thought process that someone needs to live a certain type of life for you to know they're profitable is false. I grew up around um I grew up around wealthy people and influential people. I mean, I had uncles that, had such friends. I had uncles that were like that. And so they don't look it. They don't even make you want to know that they are that rich. Because I realized that a lot of people on the retail side of trading, when we go to social media, are always showing Bugattis, Lamborghinis, the lifestyle, Dubai. I mean, all of those things are nice. Don't get me wrong. I mean, everybody wants to do it. But the real people making 2 million, 3 million, 4 million, 10 million, 20 million a year on Wall Street, you don't see them on social media. There are people losing hundreds of millions in a year and making close to $1 billion in profits as Wall Street traders. You don't see them on social media. So I've always tried to explain this thing to people that profitability doesn't look like what you think it is. Someone has $100 account, and then he makes 20% of his account in 2 weeks, and he goes online and someone shames him and says, how would you call yourself a profitable trader when you just made just $20? And I always go by, when I see such statements and call me 20%, it means that if you had this discipline to make 20% in the span of 2 weeks, if you had 100,000 and you could make 5% or 10%, you would be more content with what you have instead of trying to aim to flip in the account. Most of what we see in retail trading today are people just trying money because at the end of the day, like they say, no risk, no Ferrari. So people need to get to a point where they understand trading is a systematic approach.
Okay. So Ryan, let me just elaborate on that. I completely agree with you. People now, especially on the trading side and everything, They look at you, judge, try you, and convict you. And it is wrong completely. And one of the things I've learned with time, not even in trading, but in life in general, the most successful people are the most quiet ones. They're not going to sit there, go out on the internet. They're not going to be talking about how much money they make. They're not going to actually, believe it or not, they're not going to show you their trading account. And, that's the biggest problem I've had in history is people like, okay, how much money are you making? What are you doing? This, that. And I'm trying to tell them that does not matter at all, right? And the biggest problem the traders have is why are you doing this? If you're doing this for money, if your dream is money, you're never going to last. You'll blow out your account. If your dream is something else, like my dream is my family, that will last and be a long time. And I could give you a perfect example. I had nothing. I was poor. My father flipped burgers at Burger King. And I've been working since I was 14 years old and everything. When I started trading in 1996, I got lucky because of the internet boom. So no matter what I did, I was going to make money. And I leveraged up. I went in completely, no risk management at all, everything. In 2000, I was worth millions. And then internet bubble crashed and I lost everything. But the problem came down to is I became materialistic. I went out, bought the cars, the mansions, the watches, the whole 9 yards and everything. And I lost everything. And then when you have to give everything back on pennies of the dollar, it literally destroys you. And I learned at that point, you can't change your lifestyle. You can't become someone different because you have no more edge. You're not hungry at all. So since that point, when I came back, I am not materialistic at all. And that's extremely hard because in the US, everyone is materialistic. It's all about money, 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 money now here. And it's not about family. My goal was financial freedom. So I could sit there when I had kids, I could sit there and be there for them for every minute as they grow up. I didn't want to sit there, be traveling, be working all day long to a point I can't be there for them. Today, I have 2 kids and I'm there every minute. I've been there every minute and I'm their best friend because I've been involved in their life. That to me is worth more than money at all. And also, I stay hungry. My actions are showing the kids that you have to be consistently in your mindset. You cannot be materialistic at all. And that's the fundamental problem is people come into this industry and think that, oh, I'm going to be a billionaire. That does not matter. The profits will come if you do your job. That's the thing you have to do. You have to be there. You have to be hungry. You have to put the trades on and you have to trade with no emotions and risk management. And consistently, you'll make money. And the thing you have to understand, when the markets are consolidating, your goal is to break even. When the markets are trending, that's when the rewards will come. So you have to be patient and you have to have that right mindset. Otherwise, you're not going to make it.
I completely agree on that, Manish. I believe that the times, and I believe this does not only apply to trading. I believe that it applies to everything in this world, and is when you are doing things because of money or because of the lack of money, and the only emotion behind and the only reason behind you're doing something is due to a materialistic issue, you're not gonna make it. It is at times when you're gonna lose the most money, when you're gonna fail the most. And trading is not an exception to that. I mean, trading at the end is a profession, just like any other profession in the world. It needs education, it needs discipline, it needs consistency. And as of all, you have to love it. You must love trading and you must love what you do to be successful at it. I mean, I have never known any person that actually loves what they do and they are successful. And I am not saying successful only in economic wise, only monetary wise. Successful applies to a whole different spectrums of your life, including money, including family, including emotional stability, amongst a lot of things. And I have never known anyone that does not love what they do and that they are successful. I believe that if you want to be a successful trader, you should not only think about the money. You should actually detach from the idea of money, and you should love what you do. You should love trading. You should be in love with trading. Detach from the money, attach to discipline, to risk management, to habits, and that's when results will come. And the good thing about trading is that, as Ryan said, if you're able to do 5% consistently or 20% every year consistently in a $100 account, you can replicate that with a $100,000 account and with $1 million account. Trading is very scalable in that sense. So you just have to get the habits, getting love with trading, get the discipline, and put in the work. As Manesh said, get every day into the markets, take your trades, have a good risk management in place. If the market is ranging, go break even. If the market is doing something unnatural to your strategy, go break even. If it is trending, pick the whole movement.
Yeah, no, Fredo, I think one thing is that, why are you doing Valetax? For me, the reason why I'm doing this is I want to get back to the industry. Trading has been the greatest gift in my life. In the corporate world, I got bored. Every day I was going to meetings after meetings after meetings. I was never learning at all. And it got boring. And you're capped at a certain salary and you're away from your family. For me, trading has given me the financial freedom that I could be with my family and everything. And it was a huge, hard journey to coming from a retail trader to institutional. And not a lot of people make it. And then one of the things I want to do, and I started to do years ago, is the reason why I teach and help is because I want people to go through the process I did, get the rewards from this industry, be financially free, and you could do whatever you want, which is fun. So many people doing things are not fun anymore, and they got to stop doing that. It's all because of money, and that's the reason why I do this, and that's one of the reasons why I'm coming here on Valtalks is to talk, is to share my experience, to hopefully turn that retail trader into institutional trader, and he could experience some of the things I have.
I love that. I completely love that. Can you see my screen, Manesh? Okay,
Yep.
awesome. Let me go to the correct slide. Yes, risk reg, misconception. What a trader actually needs.
I was just saying, while Freddie pulls up the PowerPoint, if you guys have any questions, just post them in the chat.
Yeah, please go ahead and post any type of questions. We can answer it real time. And now getting into what a trader needs. A trader needs consistency. I completely agree with this. I mean, a trader, as we mentioned, it is about surviving. It is not about making instant profit. It is not about being in the game for a month, for a year, for 2 years. It is being in the game for long run. And in that sense, risk management, what risk management truly allows you is that even in the worst scenario, in the black swan, in the worst consecutive losses that you might have, you are still alive. In that sense, as a trader, you should not seek extremely good profits. You should not seek the number, but you should seek consistency. Being consistent every day that you trade, maintaining a discipline and being consistent on your risk, on your trading setups, on your habits. And this includes, of course, avoiding any type, not also false media, social media, any type of outside noise that you might hear. It is very common that because you saw a trader win, because you saw a trader post their trade today, and you were in a long in gold, but the trader posted a short, you start second guessing your trade and you decide to close and get into the short position, and you end up losing. And if you just follow up your system, you would have won, right? And at the end, it is focusing on your path, take the noise away. Take the outside noise away. Only accept the noise, or only accept those who actually contribute to your trading, who make you grow, who make you better as a trader, and focus on yourself. It is very common that somehow everyone wins in social media. Like somehow every trader is successful in social media, even though we know the statistics are like 85% in retail trading lose. You go into social media and apparently 100% win. I mean, there is clearly something not being 100% honest there. So you should avoid completely false media. You should stick to your own plan, stick to yourself, and ultimately focus on creating habits and focus on risk management. And that will definitely lead you or give you a bunch of steps to become a profitable trader. What can you say about this, Manesh?
Alfredo, you didn't know we're perfect? I mean, to be 100%, you have to be perfect, right? Listen, to be human is not to be perfect, okay? You're going to make mistakes. All kinds of good things are going to happen. Even me, with this many years of experience, will make mistakes. It's going to happen. And you can't control this market at all. So again, risk management is the key. If you're listening to media, understand one thing. If you're following the crowd, you're going to lose. I guarantee you. I could tell you right now, from an institutional perspective, there are algorithms, machines that are created that crawl the internet, that search the internet for all the things that you guys talk about on social media. So if you're talking about the yen being strong, that they're going to see that you're talking about that, and they're going to know what the retail perspective is. And at that point, they will play games with you in order for you to lose eventually. Remember, if you're buying, someone's selling. If someone's selling, you're buying. So if something's really good that the internet talks about, then why is the person on the other side? That's the number one question you should ask. So if you're looking at social media and you're getting your ideas from social media and everything, I would be very careful, because I can tell you right now, there's algorithms that are going to beat you and they're against you completely. I don't listen to news. I don't listen to social media. I don't do anything at all. I solely look at the charts, because why? The charts tell you the actions people take. Because someone may say, I'm short gold, but if you don't see them place a trade, then that's false. I believe in actions, not words anymore. I've gone through this scenario where I listen to people, listen to all kinds of stuff, and I blew out my accounts and everything to a point. I don't care about that. I rather sit there and look at the actions people take. So when you start seeing a trend, that's when a lot of people are taking actions towards a particular instrument. And that's when you want to get in with a risk management, because you don't know when it's going to end. And that's where risk management comes into play, money management and everything there. So that's my thoughts on that.
Completely agree. Well, now I believe we can go to the key takeaways of this fourth episode of Valetax. Allow me to share the screen one more time. Key takeaways. As key takeaways that we can have is that number one, risk, edge, and psychology must work in order. Second key takeaway is that protecting your capital is more important than multiplying it. And lastly, one good strategy plus bad risk is going to be a failure. As we were mentioning, you can have the edge, you can have the best edge in the world, the best strategy, the best algo, the best thing in trading. If there's no good risk management, at some point, maybe 1 year, 2 years, a couple of months after, you're going to end up losing everything. And that's not the point, right? I mean, that's not the objective. The objective is to be here for 10 years as Manesh, for 30 years as Manesh. I mean, the objective is to be like Manesh, a professional trader for so many years. I mean, for me, that I am 22 years old and I have been trading for almost 6 years, my objective is to be like Manesh, be able to get an income completely from trading, sustain a family completely from trading, get a property from trading. I mean, for me, the objective is to be here in the long run, to be 50, to be 60, to be 70, and still be trading and be there in the markets every day, adapting to the new conditions, adapting to the new markets that might come in a couple of years or in a couple decades. I believe that's the objective we should seek. A long-term vision, not short-term, nor easy money, nor easy profits. It should be a long-term perspective.
And have fun.
And have fun. Yeah. Trading is very fun. So you have fun.
I mean, if you're not
I
having
agree.
fun, you're too serious and you're too emotional. That's the way I look at it.
Yeah, I agree. I agree. And at the end, yeah, I mean, you only live once, right? You should be doing stuff that are actually valuable, concentrating in stuff that are actually important, like your family, like your health, like traveling. I don't know. That may vary from person to person, but at the end, I believe trading is a tool to achieve that, right? So yeah, I believe
And
that.
so let me leave one remark, which I always do in trade
Please,
shows
Manish.
and everything. And this is how important money management is. If you've been trading for a long time, I challenge you to look at one scenario. After you enter a trade, after 2 bars, you go to break even. There's no more risk. Where would you be today? Most people go round trip and lose because of money management, not having risk control at all. But after 2 bars, if you just go to break even, where would you be today? That's all the comment I challenge everyone for.
I like it. I'm gonna think about that too. After 2 bars going break even.
Yeah, because I mean, think about it. If you're back testing, your edge showed you that it's going to go. The very first bar should be profitable. Second bar should be more profitable. On the third bar, you go to break even. At that point, you're letting the market do its thing. That's it. And once you're profitable and you go to break even, there's no more risk. And at that point, you're letting the market do its thing. Because you can't control it. And I look back and someone had told me this when I first started trading. Oh, wow. Where would I be today? Right? It would be a whole new level. Has nothing to do with indicators, nothing at all. But the key is it's part of psychology because once you take the risk out, you're not thinking about that trade.
Mm.
So from a psychological point of view, you're completely good and you won't interfere with it and you allow your trading plan to execute. And this is something worldwide. I mean, talking about trade shows, everyone. Have 2 bars, go to break even. That's it. It's as simple as that. And see how consistent you'll be as a profitable trader.
I like that. I really do. But well, I believe that with this we can conclude with this takeaway that Manesh told us. 2 bars, go break even. Once you're break even, it is a risk-free trade. And there's you can take away all the emotions behind it, all the psychological aspect, calm down, and just let the trade do its thing.
Yeah.
With nothing else to mention, I believe that we can conclude our fourth episode of Valetax. Before doing so, we can briefly go into the questions and answers into a questions and answers session. Sorry. So if you have any questions, please let us know in the comment section, and we can answer as best as we can. We have actually one question that is how not to overtrade. That's a good
You want to
question.
answer that?
I wanna answer the first thing or something that I can recommend. It is how not to overtrade. I believe that having a plan, a structured plan that tells you the maximum amount of trades that you can take within a session, within a week, within a month. I mean, that is completely applicable to specifically to you in that sense. To each trader is different, but establishing a maximum amount of losses per day for me, for example, is the for a beginner. I can say that maybe only maximum. I mean, Manesha can also give us an example for a beginner. But if you're doing intraday trading, I would say no more than 3 entries a day. Maximum, I would go with 3 entries a day. If you get 2 losses, you're out. If you get 1 win, I would go out. I mean, considering that you have a high risk to reward, I would get in 1 time. If I am stopped out, I get in the second time. And that might go to take profit, and then I end up the day. But if that goes break even, I might have a third trade to try to get the profits for the day. And if that goes to take profit, I am done. If that goes to stop loss, I am done as well. So maximum 3 days, 3 trades a day. And once I get a good trade, I am done for the day. That's what I personally do. And it has helped me a lot to avoid overtrading. And also, this also applies only for 1 session. I only trade a New York session. So if you trade more than 1 session, also apply a limit for trades for each session. That's what I would recommend. But that's what I believe that has helped me a lot, like getting maximum 3 trades per day. And it has been very good for the sense of risk management as well as overtrading. What do you believe, Manesh?
No, I think you said it perfectly. One, you got to follow your trading plan. If you're a beginner, I definitely would put a cap of risk per day, right? So I don't know if you're day trading, swing trading, or long term, but your trading plan will adjust based on what type of trader you are. So let's say you're day trading. If you're day trading, then I'll say, okay, I'm going to have this much risk per day. So let's say it's $200 risk per day. So based on that, you're going to know how many trades you could take because you know what your entry is going to be on the chart. You know where your risk is and you know what the risk per day is going to be. And the way I would look at it is if your risk is $200 per day and now you're up 3 times that, then you could sit there and walk away, as Alfredo, you said, right? But I would allocate a risk per day which should not be more than 1% of your account at all, okay? And start that way. But if you're a beginning trader, I really, really, really recommend that you back test and make sure you're profitable in the paper trading account before you go live. When you go live, you're going to know how many trades per day you could take and everything. If you're over trading, that means you probably need to do a little more back testing and then cap yourself on the risk per day. So pretty much like what Alfredo said is he's got a risk per day, but he says also, I know for my back testing and everything, I'm going to be at 3 trades per day and I'm only going to do New York and all that. So you have to figure out what works for you, for your personality and put in a trading plan and then consistently trade it.
Yeah, I believe that's a very valuable advice. Having a maximum loss is key to function as a trader. And if you're very early in your stage as a trader, it is extremely important to test your edge. As we were speaking on this whole presentation, first test that your edge is actually an edge in the financial markets, that it actually is profitable in the long run. And once you know that as a fact, you will also feel much more confident that you will execute much more better when transferring to real money, right? We have a second question that is, so it is more scaling than opportunity sizing?
So I think this is dealing with dollar cost averaging. I'm not a believer of dollar cost averaging or anything. You know, if you enter here, it go against you, then you buy more, and average down and all that. I'm not for that at all. I've never been into that. When the moments I start doing that, it was not a good experience for me at all. If you have the risk per trade and you enter a trade, that's it. If it goes against you, I'm not going to sit there and do dollar cost averaging or anything like that. I'm not going to scale in, scale out, or anything like that. For me and my personality, I just believe going in with the number of contracts for the risk per trade. So for me, it's more risk per trade, and my contract size is based on that risk per trade, based on the charts. Because I don't want to complicate things knowing how many contracts I got in at what position and everything. Where am I going to make money? when do I peel this one off and all that off? That's too complex for me to a point. I want to keep my life simple.
I
How
agree.
do you feel about that?
I also do not like. I mean, I like getting one entry point and that's it. I don't like averaging and seizing more trades and scaling. You know, like putting more contracts. I do not like it. I mean, I believe that it takes away the systematical part and becomes a lot more. You know, like how did they call it? Discretional. It's in Spanish. We
Yeah.
say discrecional. Yeah, and
Yep.
I believe it takes it can very easily go away or go get into the psychological aspect, and it can very easily like you know make you make more mistakes and be less efficient.
Yep.
Then we have another question. How about emotion? I did trading plan and sometime I change it, then the trade went big. Then I pump and then I ump and then loss out. Um, okay, then I jump
Yeah.
and then loss out.
Revenge trading.
Revenge trading, yeah. Yeah, and that
I mean,
happens when you do not follow risk management. I mean, when you start getting very confident in your edge, you believe that there's no way that you can lose, you are winning every time, you get too huge into a position, much more than you should have to, much more than you established, you end up losing, and that just ends up becoming a big snowball of emotions that end making you completely lose your mind and break your plan as a whole. So the idea is to take away all the emotional aspect and focus on your plan. Trade like a bot, trade like a robot, trade like an algo in that sense. Take away completely the emotional aspect. Follow your plan. If you lose, you're out. I mean, I believe that one advice that at some point a trader gave me is that when he loses, he uninstalls, he erases the apps of trading and turns off his PC. So that way he cannot come back to the markets.
yeah, you actually, when you lose, you should walk away for at least 5 or 10 minutes. That's the right. I always tell people if you're day trading and losing, go get a glass of water. In fact, in the institutional world, they tell you that too. If you lose, get up out of your desk, go get a glass of water, get away from everything for at least 5 minutes, and come back. And you guys have to understand one thing: this market is not going anywhere. There's tomorrow. You can make money tomorrow. You can make money another day. Your goal is not to make money every day. Your goal is to be consistently profitable. Okay. And so, if you lose and it goes your way, fine. Tomorrow's another day. You'll get it tomorrow. So don't think today, I have to do everything.
Yeah, that is very important. I mean, that the market is open the next day and the next day and the next day after tomorrow. I mean,
Yeah. It's not going anywhere.
it is not going anywhere. Exactly. I mean, if you lose your opportunity today, there will be tomorrow and next week and next month. I mean, there's no rush. There's no rush. You can walk off with the loss, walk off, break even, and just wait for the next day. There's no biggies in that.
Yeah, I mean, I lost everything in 2000. And look, I'm here. Took years, but yeah, I'm here.
Yeah,
Right. So, I mean, as long as you don't give up, you're fine. Right. And you got to get that notion out is I got to conquer the market. You can't. Just you're there to trade. That's it. Execute your plan and move on.
agreed. Yeah, pretty much that's it. I like, there's actually a statistics that from the 85% that lose in trading, 70% give up after 3 months. Meaning that if you're able to last more than 3 months, you increase your chances to be profitable by a lot more. So
Yeah.
by staying in the game, by just being there and staying in the long run, you will increase your chances every single time, more and more and more. And at some point, you will be profitable and you will make it.
My father told me one thing when I lost everything. If you walk away from trading, you're walking away and you're giving up. If you give up in this, you're going to give up in everything else in your life. You're going to set a habit. So you've got to conquer it. If you come here to trade and you come here for the right reasons, you don't give up. We're here to help you every step of the way, but you don't give up.
Exactly right. Well, with that, I believe we can now end. There are no more questions. It was a pleasure to have all of you. Stay tuned for the next episode of Valetax. We will be having our next episode. I will be your host. We will have Manesh, of course, in our series. We will have Casa this time, the global head of education here in Valetax. So thanks all of you for being here. It was a pleasure to be with you. And stay tuned with next series of Valetax, talks that power your next move. Thank you all.
Thank you.